What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. All right, so before we get into today's video, just a big shout out to all the moms out there. Happy Mother's Day to you. And for us fellas, make sure that you call your mom, right? You do not want to be the guy who forgot about Mother's Day, whether it's for your mom or your significant other. All right, so with that, let's get into today's video. So it's been a couple of months since we talked about Virgin Galactic, and the stock really hasn't done much to justify its place in the portfolio. It's down 49.18% year to date. This includes the significant beating it took this Friday post-earning with the 9.21% drop. And let's not even talk about the fact that it is down more than 80% since it has made its all-time high at over $50. So at this point, anyone still holding the stock really needs to look in the mirror and ask themselves, is it really worth it? So in today's video, I'll hit on the main takeaways from the earning call and what caused us to revisit the sub $7 range, touch on price projections for the future, and answer the question on whether or not I still see value in Virgin Galactic. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so I know I always say this, but I cannot stress this enough. Virgin Galactic is pre-revenue, and as such, two of the most important metrics to pay attention to here are their cash burn versus their cash on hand. Now, though the earning per share or EPS doesn't count all that much, it's still worth noting that Virgin Galactic disappointed expectations with their Q1 performance. Their actual EPS came in at negative 36 cents versus the expected negative 32 cents. Now, looking at their cash burn rate, they spent $68 million in Q1 and are expecting to be in the $80 to $90 million range in Q2. That, in the grand scheme of things, isn't too bad when you consider that they closed out the quarter with $1.22 billion in cash and cash equivalents. It's actually pretty good. So why did the stock take a nosedive if they're well capitalized and their cash burn rate is well within the acceptable range? That, my friends, is the result of more delays being announced. During the call, CEO Michael Colglazier stated, and I quote, "Against a backdrop of escalating supply chain and labor constraints, our team are containing the majority of these issues to minimize impact to schedule." And he also added, "We look forward to returning to space in the fourth quarter and launching commercial service in the first quarter of next year." End of quote. That comes as a major disappointment, especially when just last quarter they clearly communicated that they were still on track for VSS Unity to have its first commercial flight in Q4 2022. And let's be real, most investors at this point have no patience left for more delays. As a result of that one quarter slip for a commercial space flight, Analyst Austin Moeller downgraded the stock on Friday to a hold rating from buy and lowered his price target from $36 all the way down to $8. Okay, now that was the only downgrade post-earning, but a significant one nonetheless, given that Austin was one of the most bullish analysts for this stock. Of course, this call wasn't all bad news, and actually, the fact that they didn't retract any of the positive details shared during the last call was a plus in my mind. You can catch my last video here if you missed it. The one additional piece of information they dropped is that their paid reservation number has now gone up to around 800. This is up from 750 people or so from 3 months ago. So the interest from customers is still there, and we're moving in the right direction. Overall, with this most recent stock downgrade and the couple of price target adjustments by other analysts, we still have 10 total ratings, right? But we're now down to 3 buys, up to 4 holds, and no change in the 3 sell ratings that we had previously. The average price consensus has moved lower from $15 to $12.94. The forecast now has us potentially going as high as $24 on the high end and as low as $8. And yes, we are lower than the $8 today, but remember that these projections are looking out 12 months out, right? So if nothing else, this is telling you that analysts are still projecting a 15 to 90% increase, even if we exclude the best case scenario of $24. With that in mind, the big question is Virgin Galactic still worth it? And the answer really is, It depends, right? So given the current macro backdrop and tightening financial conditions, a company like Virgin Galactic is probably not going to catch much of a bid from most institutional investors. It's currently unprofitable, has large amounts of uncertainty around it, and this latest delay reinforces how much of a wild card it actually is. If your investment time horizon is 1 year or less, I'd say cut your losses here, right? I mean, great way to offset any tax or potential capital gain come 2023. If, like me, however, you're looking out to 2025, 2026, realize that it's literally dead money for the next 9 to 12 months. But it also means that sub the $10 level, it is prime accumulation territory. I would go as far as saying that this stock is probably range bound, and it's going to be very, very difficult to break over $11 until we return to commercial flight. And near term, as more rate hikes go into effect over the next few months to fight inflation, we may see new all-time lows. So that's really what you're signing up for if you stay in the stock. What this means for me in simple terms is that $8 and under is buyable. Above $8 all the way up to $11 is going to be my tradable range. And that's going to be where I'm going to book some profit for those brief up days. If this is done right, this should allow me to reduce my average cost and ultimately increase my overall position with house money. And that would be pretty cool if it works out. The last thing I will say is this. The stock market, broadly speaking, is about to get much worse before it gets better. Same goes for crypto, right? So just keep that in mind. Between now and the end of Q2, it's going to be 1 step forward and 2 steps back. So every rally more than likely will be unsustainable and we'll end up with a sharp sell-off. My approach then, as I just kind of described, until we get at least a couple of readings showing inflation leveling off or maybe reversing even, the approach is going to be simple. Buy on those deep red days, as I've been saying, and trim a portion of those extra shares during the green days. Whether we like it or not, with every central bank around the globe starting to raise interest rates to fight off inflation, the macroeconomic backdrop is really what's driving the market. Investors are increasingly moving to cash, and I would say that it would be wise to have some dry powder available to deploy when opportunity comes knocking. The name of the game over the next couple of months is going to be patience, right? You gotta be patient here. It is going to be a painful process, no doubt about that, but if you're a long-term investor with limited capital, this bear market that we're in right now is precisely what you want for max accumulation without having to worry about FOMO. And on that note, I'll leave it here for today. Don't forget to drop this video a like if it helped you gain a new perspective and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday and as time allows, here and there during the week. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.